Ben Maldonado. Looking forward to hearing and seeing your exceptional work. Welcome back to F.A.C.E. I'm now making you the presenter. This is Ben Maldonado, everybody, and you could find Ben. Ben, you have it?
Hey, Dale.
Hi, Ben. How are you? Just
Good,
waiting.
how are you?
Good, bro. I'm just waiting to see your screen. Okay,
Yep.
here we go. Okay, and your new company. So, Ben, we don't have to go over your journey like we did the first time we met you. And I've been following your stuff on Twitter, and you make some very prescient calls. And your style of technical analysis is, for most people, very advanced, esoteric. It's completely unconventional. You have geometric things, and I just want to let you take over the control of our TV here, like the Outer Limits TV show in the 70s, and tell us what's on your radar here. And also with a full moon coming up Friday. And do you pay any attention to Bradley indicators?
Yeah, I look at it like at the beginning of the year just to see where where the turns are and what they're looking for in the upcoming year. I don't use it to trade, but a lot of the stuff that I do is you can't simply rely on it to trade, but it gives you sort of the background weather.
Because it nailed the low back in March where we had that little pullback, and you nailed that low too. I remember I was having a mental battle within myself of there was a Bradley turn date. Ben was liking it there for another big rally. You're part of my intelligence gathering, buddy. And a red weekly reversal candle. And so I went with the weekly reversal, but then Monday it just came in and blew to the upside. That was also a Bradley turning point day. I forgot exactly what the date was. And we have another one coming on Friday. So where do you want to start today?
Well, what we do a lot with the +3 forecasting stuff is we do a lot of day trading. We love day trading, but today I wanted to sort of switch it up a little bit and start with sort of longer term, bigger picture macro stuff from a cycles perspective.
Beautiful.
Because we're in a really unique time in that there's a confluence of a lot of cycles that have been hitting over the past 6 weeks or so, and will continue for another 2 to 3, 4 weeks. So we're in a major sort of change period, and I think it's why we've seen a lot of choppiness in the markets and not a lot of trending and a lot of one day it's this, one day it's that, as the human beings that are interacting with the market sort of adjust to this different energy and this different sort of cycle that we're entering. So let's take a walk back in.
That's what makes you a watchman, because you alert the public to things that most people would not have awareness of, the kind of cycles. A lot of guys are talking about cycles that are coming in here that I'm not talking about a presidential cycle or just a regular business cycle, but a lot of the guys that I read, they're talking about things that haven't happened in 400 years, 700 years. I mean, these are the magnitude of what's a lot of these guys are looking at is really huge. So
it's beyond anybody who's living lifetime.
Yeah.
Some of these.
So I mean, it's outside of our experience, during our lifetime. So it's going to be new for us, but it's happened before, right? History doesn't repeat, but always repeat, but it usually rhymes. So
absolutely, and we're going to show you some rhyming, and we're going to play a little game, Dale, and you're going to be a part of it. So,
okay, buddy.
Can you see the chart with 72, 75?
Yeah, with the big yellow circle.
Yeah. So here's a period where
Nixon.
Absolutely. This
okay.
is
Nixon, Trump.
That's right. We're connected here.
Okay.
And
right.
It's not by anything other than the cycles. We are connected to things that are happening are, as you said, they're not exactly repeating, but they're rhyming. I want to go over some of the things, and we're going to play a game. I'm going to say something that happened in the 70s, and you tell me what it connects to today. So
Okay.
in the 70s, there was this group of stocks that everybody bought because they were going to grow no matter what the economy did. They were considered safe. Everybody piled into them. It's called the Nifty 50.
Right.
What's the parallel? What's the parallel today?
FANG.
Right, exactly. Everybody's buying Facebook, Apple, Amazon, Netflix, Google because they're going to grow. They're growing faster than the economy. It's a place to put your money, and you're going to be safe there.
Right.
Number two.
You'll take advantage of the revolution of new technology that's
Right.
wiping out the middleman.
Yep.
Okay.
So, similarity number two. President Nixon was attacking the press relentlessly during his presidency. One of his quotes was, "The press is the enemy." Well, what's that equate to today?
Same thing with our current
Fake news,
president.
right? Fake news. Trump says the press is
That's
fake
right.
news. The press is the enemy of the state. Another similarity we're dealing with. Here's one you'll love. Nixon, first president to ever visit China. Happened in 1972.
That's a neat.
China became important now for an opposite reason, right? Today, China is everything now, but it's because we're in a trade war with China. First ever trade war. Our first ever really major encounter where we're butting heads with China publicly, openly, just like back in 72 was the first time we ever had open relations with.
Right. So we opened the door in the 70s, and we're trying to shut the door after the elephant's out of the cage.
Absolutely.
Okay.
Here's the kicker. The last one I'll go over with you. In 72, prior to the election, Nixon pressured and got the Fed to cut rates to help his election prospects.
Arthur Burns.
What is Trump trying to do right now?
Yeah, same thing. And that was Arthur Burns.
He's doing the exact same thing. He keeps telling Powell, give me QE, cut rates. We'll really get things going.
But Burns accommodated Nixon. Do you think Powell will accommodate President Trump?
You know what? That's the big wild card, and that's the beauty about the cycles. It's not written in stone what's going to happen. It sets up the environment for similar things to be able to happen.
Because Ben, and I know I've interrupted you, Lon. This is going to be the last thing I'm going to let you.
No, it's okay.
No, but the difference is that if Powell acquiesces, it's not going to be because of the request of the administration. It's going to be because of the S&Ps dropping below the December, January lows, and S&P's trading 2,000. Because I believe they're S&P dependent, like Peter Bookvar says, instead of data dependent.
Yeah, and listen, you may be right. We don't know what's going to cause them to do it, but we know the table's set. Right?
Okay.
The background weather is there, the table's set. So here's the S&P in 72 to 75. I want to point out a few things. We started with a low in mid 1970, big rally up into this megaphone top, and then we rolled over down into the 74. Now check this next slide out. This is the current market. Big low in 2016. You can either take the low in January, February, or you can take the election low where Trump got elected. Big rally up. We're doing the megaphone again. If we follow the cycle, this is what we're looking at. So what's been happening in here and why we're getting this crazy price action and wild swings is the cycles as they hit and begin to change, people's perceptions begin to change. People's interpretations of value and what they see in the market begin to change. And as it hits that tipping point, this is where we're going longer term. Now, is it going to be this bad? Is it going to be exactly like 72, 74? I doubt it. Who knows? It's going to be a little different. It's going to have its own nuances. Um,
Does your arrow, your first orange arrow, imply a new high from here first before that takes hold?
Before this last break, I was convinced we were going to go to a new high. I was thinking we were going to go. The odds were there and probabilities favored going to 30-40 to 30-60.
Okay.
The level of damage that's been done with this last decline has reduced that probability. I still think there's a chance we push up. Maybe we push up to hit the top of this megaphone one more time before we kiss it goodbye.
That would still be about 30-50, right?
A little over 3,000, maybe 30-20, 30-30 is possible. But we got to be on alert for the fact that we may have, crossed the Rubicon already.
Yeah.
So
I'm leaning that way. I actually have some stuff. I'm looking to sell this reflex rally into this weekend around 28.80 to 29.20 in there. So I actually think because of the damage you've cited with things like Google, I mean the things that people love, Intel, they were the canaries. I'm going to look for a failing rally here first.
Yeah, I mean,
right or wrong.
I'm on alert watching price action. I want to see where's this rally going through? What levels can we get through? What resistance can we get through? Where do we get stuck? Is it sloppy? Is it strong? I mean, I think we really got to watch it to get clues as to what direction it's going to take. Is it going to make that new high, or is it just going to make?
And your cell phone number is? Just kidding. I'll call you at 2 in the morning, Ben.
Yeah.
Ben, we're getting a negative 4-hour candle here, buddy. What should we do? Go ahead.
Yeah. So let's now I want to take a run and look at a couple other sort of popular markets that we everybody likes to look at and everybody likes to talk about. The one thing I want to give a sort of an overview is all of our work and our tools that we do. They're designed to take this sort of limitless environment of the market, because the market is limitless, right? It can do anything, it can go anywhere. And what we have to do as traders, and what we do with our tools, is we try and shrink it down into a much smaller area where we can engage with the market with a favorable risk-reward ratio. In other words, what are levels, what are areas, what are patterns that we can use to create an edge when we go into the market. So everything you're going to see, and all the stuff that we do and I post that you like has components of these different things. And I'll show you some of this in the chart. So here's daily gold, right? Daily gold has been channeling nicely. The things I'll point to here, the key level on gold is around this 1350 area. As you can see right here, this is these thick red lines are very important geometric support and resistance. You can see here back in 2018, we were sort of oscillating around it and vibrating around this level, trying to decide which way to go. Once we got above it, checked back to it, see where it held here, then it gives you the pattern to launch right up into the next square. And here we got stopped, couldn't get above it, so we're stuck under that. Until gold can get above and sit on top of that, the upside's going to be limited and capped. Areas where we can see potentially gold going, this midpoint here, extremely important. You can see multiple times where prices come into it.
Where's that, 1240?
The midpoint is about 1274.
1217? Okay.
1274.
Oh, 74. Okay, thank you, Ben. Does the channel break mean anything to you?
It means we could have a push up, right? We broke out of that channel, so that it may try and push back up into this area. That's why we got to watch price action and see where it stops, where it gets bought. Because we're also above this midpoint here, so there is some strength short term that's going to come in. Once we get below this, then you're looking at levels like 1250, 1237, and in a really, really bad push, you can get down to 1200 where you have this strong support here. So gold overall is big picture looks bearish. Short term looks like we could move higher, and they're going to try and push it. I'll show you the gold weekly.
Was there any analog in with gold? What gold's doing now compared to the Nixon era? I mean, we came off. That was the end of Bretton Woods, wasn't it? Or that was Bretton Woods?
You know, I didn't do the
Okay.
cycle research on gold specifically, but I'm sure there are some connections.
So when you come in for an interview, you'll always have homework to do after you talk.
Always.
Yeah.
Here's a look at gold on the weekly. This is some more geometry, just a little different than you saw on the daily. Anytime you're below this XD line, you've got pressure to the downside. So we tried to get above it earlier this year and failed. Now we're stuck below it. We're also stuck below this major line on the ellipse. That's also another point of support and resistance. As you can see, the pressure on gold on a longer term to the downside, and wouldn't be surprised to see it come down to these levels here.
Where did you learn about these types of geometric formations? Are they something you created, or you read and learned about it? Because most people, I don't see many. This chart that's up here right now, 1 out of 10,000 would look at something like this. How did you learn?
This particular tool, this one here, this F.A.C.E with the lines on it, this was developed by my partner. And he taught me a lot in terms of geometry. And I also, you read books, you read about what Gann did, you read about, there's a good, Bryce Gilmore has a book that's called Geometry of Markets, really good information in there. And the reason that I think it's important is it works. It's there. You see it every day. You see it work. So it's another way, again, that as we talked about, big picture. It's another way to take this limitless environment and squeeze it down into a smaller area where you can operate with an edge. So that's the look. Here's copper. Copper is another one that you love, Dale. So I worked up some copper for you.
Okay.
This is weekly copper with similar tools on it. Copper again is under pressure. You can see based upon the geometry, we're stuck under one of these equilibrium lines, so that's going to act as resistance. 279 to 279.50 is very important resistance. As long as we stay below that, the pressure is going to be to the downside on copper. Targets on the downside, 263, 253, 230. If it really wants to get going and it can get ugly, you could talk about, down here at these support levels, 218, 183. If the economy falls off a cliff.
Do you know that Dr. Copper is getting sued for malpractice? Do you know what the charge is?
What's that?
Impersonating a bull market.
Yeah, Copper.
It was. There were a lot of people that loved it when it was, trying those upper levels near your purple line. Recovery, China, a lot of people liked it.
Look at the geometry on this.
Yeah.
Yeah, look, you came up here, didn't make it. Took another shot, got above it, couldn't make it.
Yeah.
Took one last shot to get above, couldn't make it. We go down. And then look at where it finds support, right on the midpoint.
Right. And where it failed, Ben, up in there, that after it went to support and went up there, that was 61.8. So the question I asked myself was, S&P is making new highs, recovering. Why is the copper only retracing 61.8? Why is Freeport McMoran only retracing 38%? So, there were all kinds of signals that this trade deal may fall apart.
Yeah, and that intermarket analysis is good in terms of helping to give you confirmation for what you think you're seeing, right? Does it make sense with what the price action is doing? Because we all have our macro theses and our macro theories, but but you've got to look at price. What is price doing?
Yeah, that's more for over.
Something.
Yeah, that stuff is for over a beer, a cup of coffee. But let me ask you this, Ben. You have a lot of these macro ideas. When you're entering a trade, how far do you drill down on for your entry time frame wise?
For the day trading stuff, we do 4 minutes. 4 minutes will do. Okay. But on these bigger picture moves, I like to use the daily as a sort of a trigger, and then go down to the 4 hour for entry.
Okay. Another question I've been asking everybody recently is, it's wonderful to make an accurate forecast that manifests and even, be there for some of it. The most difficult part for a lot of traders, and I'll include myself in this, is having a great hold. Okay, so you get out, you've made a nice trade, you go, yeah, I'll get in on the next reaction, and it goes without you. Like, I was long GBTC near the lows. So how do you turn a great forecast into I know how you turn it into a great trade. How do you manage trades once you're in them to make them a great hold?
Dale, I think it all starts with having a good basis of the reason why you got in, and analysis as to why you got in, right? Defining how that trade is going to go, and then using the price action within your framework to say, is it still confirming? Is it still confirming?
Beautiful.
Is it doing what it's supposed to be doing in order to fulfill this original forecast with all the research and all my background material that I put into it? If the answer is yes, and it's respecting these levels, these geometric levels, or whatever support resistance levels you use, you have to trust your work and try to stay in the position as long as possible. And let the market tell you to get out.
That is, if you have that discipline, and it's important for you to be there for the windfalls. Someone gave me a tip, and maybe our listeners could use it. I'm trying to use it more. But when you're considering taking profits on a winning trade, ask yourself if you would reverse there. And if the answer is no, you will just walk away.
That's a good one.
Isn't that pretty good? Because I get
good.
out of things I certainly wouldn't reverse on quite often. So if you just ask yourself that one question, I'm long, yeah, I know it's been a good run, but would you short it here? Yeah. Anyway.
You know how one of the ways I keep myself out of trouble, because this is what I did when I first started trading, is I would see it hit a certain price, and I'd say, well, I know it's going to do this now, and I know it's going to do that, so I need to do this. And it's when you start that mental game that you totally get yourself away from the reason you got into it and the reason that you should stay in. So stop the predicting and just deal with where price is and what it's telling you now.
How did you develop that paradigm, Ben? Because if you're walking the talk, because you could go to any webinar, and anyone who's trying to teach or that, they're all going to say it. How do you walk the talk? It's just your conviction of your work. I think sometimes it's a paradigm that people have coming into the trading business that needs to change. And how did you change your paradigm to be able to do that? Were you always a disciplined 16 or 25-year-old guy?
No, I'm disciplined in a lot of other areas, but this area took a long time. And what you said is so important, because what I've learned is the market is a mirror. And when you look into the market, it reflects back at you what's going on inside of you. And if you suffer from FOMO, it's going to show you all the little tricks and trades of FOMO, and it's going to dangle those little things in front of your face and say, hey, look at this FOMO, jump on this, jump on that, jump on this. So you got to get your head straight, and you got to figure out what's inside of you before you attack the market, because it is going to reflect back everything that's inside of you. It's going to show it right back to you. And the big change for me occurred when I started reading books not about moving averages and Fibonacci levels and retracements, but how to get the psychology of trading right, how to have the right mindset.
I have to, yeah, I have to share this from one of our viewers today, one of our attendees, from Manny. It's really classic. Another way is to take partial profits on a winning trade and let the rest run. My biggest profits come on the crumbs.
That's so true.
That's pretty cool. So even though maybe you had like a 10 lot on and you booked it, you keep one, and it turns into something you only imagined. Thank you, Manny. Anyway, I love what we do here in F.A.C.E. and Ben. I mean, what a great interview. Were these the three markets that you wanted to cover today? Oh, crude too. Okay.
Yeah, let me give you a little look at crude. So here's the weekly crude.
Thanks for bringing my favorite stuff in.
Yeah, I did. Another interesting thing, right, is we made highs on the geometric resistance.
Yeah.
Tried to get above it, got stuck again, right? So now we have a nice big first move down, and we can put this pattern on it again, geometric pattern, and we see that crude's in a spot where we could come up to here. I mean, I think 65, 66 is possible on a bounce. If there's a big time squeeze, we could get into the 70s.
Yeah.
But it's looking lower because we're stuck. As long as we're stuck below this XB line, the pressure's to the downside.
And sometimes, and what do you think of this, Ben? Sometimes the hardest trades are the best trades because with what we're seeing on TV about what's happening in the Persian Gulf, your response would be, well, God, I'm not going to short crude. There could be shooting overnight. There could be some type of accident. And so, that's in your head. So it makes it hard for you to want to do that because of a maybe. So maybe, you have to really just trade the price and not even worry about the news backdrop. But I would say most people want to be long crude into what's happening in the Middle East.
I'll tell you, Dale, one of the things that I always remember when that sort of thing comes in is there's an old saying, and it's so true. It's first the pattern, then the news. So if there's going to be some sort of hostility in the Middle East, you're going to start to see that in the price of crude. If we're going to war with Iran, if we're going to start some stuff in the skirmish in the Middle East to help Trump's re-election prospects, that chart's going to start showing it to you. So first the pattern, then the news.
Thanks for mentoring me. So, we all need to, we all need to be reminded of these things because my paradigm, I believe that, but I forget what I believe sometimes. You know what I mean?
Absolutely. That's why I listen to you guys every morning, because you're never good enough. You're never too old to learn. You just got to keep looking, keep trying to get better, keep listening to smart people, and listening to you guys every morning. I pick up a nugget here or there, and it's totally worth it. And you have to be open. You like saying, there's one of my first bosses out of college in Wall Street. He said, when you're green, you grow. When you're right, you rot.
When you're white, you die?
He says, but the point is, be green, right? Be always ready to learn. Be always willing to learn. Be open to learning new things and getting better.
Yeah. Well, I'll tell. Go ahead.
No, go ahead.
No, you go ahead.
So here's some of the shorter term stuff, because I know people that like to day trade and like to do things on a shorter time frame. So we'll go zero down from the big picture to the sort of hand-to-hand combat every day. We put this stuff out every day for people. These are these +3 fuse lines. These are levels that can define short-term support and resistance and ways of reducing your entry risk on day trading the ES. And these are not cherry-picked examples. This is Monday, Tuesday, Wednesday. This is from the last 3 days. So you can see the way you use these lines, price comes down into it. Here it was vibrating around it. What you want to see is you want to see it get above and stay above, or get below and stay below. Here it couldn't. These are 4-minute bars, by the way. Here it couldn't stay on top of the line, got below it. So now you're looking at a reaction back to it. You get the reaction back, couldn't even get to the line, so you know it's weak. You can sell a reversal here and you ride it down. That was Monday.
Okay.
Here's Tuesday. Same type of situation. The open's right here in green. So we have the fuse line here, so we know this is the important price for short-term day traders. We get above it, pull back to it, then we get a bar that stays above it. We know that the pressure is going to be to the upside, so you could buy it in here on a reversal, or you could wait for this little pullback here, well above the line, buy this reversal here. The line's dynamic, so it changes during the day, and we post when it changes. Here's where the new line comes in, and you can see here you're crisscrossing it, so there's nothing to do. Here's where the setup comes. We get below the line, pop back up, fail here, got your reversal swell there, and you slide it down.
Okay.
Here's yesterday. Same type of action. But it's in the market all the time. And again, the tools are used to provide a small window where if conditions are met, the edge is in your favor, you have an advantage, you can get into the market with positive expectations.
Okay, let me ask you this last question. Why 4-minute charts? Why did you choose 4 minutes? I know that you're, and I want you to be able to let our viewers know where they could find you. And you said, be open to learning, Ben. We learned today. I come in open when I could, stop talking and listening. I learned quite a bit from you. In fact, this interview is even better than the first one. So want you to share with the audience and people to be watching the video the best way to get in touch with you to pursue working together.
Yeah, our company Twitter is the +3 Forecast. You can see the address up there. My personal Twitter is Dale posted it in the interview notice. So if you want to see what I do personally, the stuff from the company is which I'm a part of, and I have 2 partners that are really fantastic, and we all complement each other because we do different things, and when we all come to the same conclusion, it's a powerful thing. So the 4-minute is related to the Earth. 4-minute is related to the time, the 360 days of the year, 360 degrees in a circle. So there's a geometric relationship with 4 minutes. So
okay, I knew there was some geometry in there. Okay.
Yeah, so I trade the 4-minute for the shortest term time frame based on that. But yeah, I enjoyed coming on. I'm glad it was edifying because that was the goal, and hopefully people can take something from this and make some money off it.
Ben, you're already my trading warrior brother. I love your analysis. I'm going to turn you into a regular and bring you in here every few months. So get a hold of me after this interview, and we'll book another day in the summer, late summer, and really appreciate you sharing your hard work and dedication, because people don't learn to do the things that you do without putting in the time and the energy to have acquired this. And you know what, you're a natural teacher too, because I learned from you today, and everyone thanks you. Hamid thanks you, Manny thanks you, and us here at ForexAnalytix thank you. May pips rain down on you, buddy, into the full moon and well after.
Well, thank you, Dale. You're like an angel, I think, for traders, and I would have appreciated finding you when I was first learning, but it's great to have found you, and the work you do is really, really beneficial to people trying to figure out how to do this in this crazy game that we play.
Thank you so much, Ben, and again, good hunting, a happy full moon, and every other astronomic event may we do well with this. I really liked your analog with 72 to 75. That was fascinating. So that's a
Big
wrap
thing.
for, huh?
I said big changes coming, so everyone be
Yeah.
ready. Just be open to it.
Yeah, I've been playing that song. There's a change a coming, you know, real good blues song. So, Ben, thank you, man. I appreciate you. So glad I met you on Twitter. See, it's not enough for me to buy Twitter stock, but you know what? Twitter has made a major difference in my career and my life by meeting people like you, Ben.
I'm grateful, Dale. Thanks so much.
All right, partner. All right, that's a wrap for us. We'll see everyone for TGIF tomorrow. Remember, don't just count your pips, count your blessings. You know, people coming in willing to share their knowledge with us every day. That sure is a blessing for me and everyone else part of our community. So adios, everyone. We'll see how the week wraps up. Thank you again, Ben.
Take care.
All right.